HSBC's head of asset allocation, Fredrik Nerbrand. He and his team called the bottom of the equity market in March 2009. Let's find out what his current strategy is. Just before we go on to that, I mean, obviously today's news is highly dominated by the banks. Can I just get a general thought of where you think we are in this particular cycle? Do you think we are actually staring at a European banking crisis right now, imminently? Or, as I put it to one of our other guests earlier on, you know what, this is just another one of those really bad days for the banks, and they're going to be up and down like this for quite a while, and we might as well just get used to it.
Yeah, we might just well get used to the banking system, I guess. But rather than just looking at this as a European issue, if we're looking at the extent of the breadth of what leading indicators are telling us, is that across the globe, everything is losing momentum. It's actually, we've lost more momentum now, more indicators are losing momentum now than they did back in 08 and even 09. So this is not just about the fact that this is a banking-led crisis in the Eurozone. This is about the fact that the trade cycle and the industrial cycle is coming down. In that environment, owning risk is not really top of my agenda.
So where are you putting your money, sir?
Well, you know, it's like... the first rule of investment, I guess, as far as I'm concerned, is don't lose money, and the second rule is don't forget rule number one. So in the sense of what I'm looking at now is being long cash, has an option value, I can go into markets later, and I'm long still treasuries and safe haven assets such as gold. Because of the fact that this is still an environment which is highly uncertain, the economic cycle in terms of it's coming down, but also the volatility of the economic cycle is up, which means the risk premia should also go up.
Is the Swiss franc still really an option now, given those new rules?
I mean, if anything, the takeaway from the Swiss franc was that...
negative almost.
Yeah, well, yes, but actually what you do on the back of that is if you take away one risk-free asset, or let's call it a risk-free asset, or a safe asset, there's going to be more demand for other risk-free or risk-safe havens in terms of gold, Norwegian Krone, Singapore dollars. I mean, that's really where that float is going to go towards.
We're really seeing a currency war at the moment, wouldn't you agree?
Yeah.
And who's going to win?
No one. It's weapons of mass destruction, but it's mutual destruction more than anything else.
Well, who's going to win the next battle? I mean, are we seeing the dollar, the US dollar, actually coming back and returning as that safe haven that it once was?
Yeah, I mean, that's a good question, because if you're seeing that historically, like traditional logic would suggest in an environment which is uncertain in terms of macroeconomics as we have today, actually that should be dollar positive. But having said that, the dollar is still struggling with a lot of the issues that are still underlying in terms of the U.S. fiscal position and in terms of growth in the U.S., which means that across the board, more and more investors are going towards the emerging market currencies more than anything else.
Fredrik, where are we in the economic cycle? Or is it just impossible to say now, because we are in really uncharted territory? We've not seen a cycle like this ever.
No, I mean, as I said before, in terms of just the breadth of leading indicators coming off, we're now down at 08 type of levels. But of course, the magnitude isn't really there in terms of the sheer drop in those numbers. In our view, it's not just about what's going to happen to the immediate cyclical issue. It is also the structural issue, that what our economists call the permafrost of economic development, and that's really the big risk issue.
Very briefly, we've got this graph up on the screen. In simple terms, I'm a simple man, Fredrik. Explain what we can see there.
Okay, so this is, let me see, I think, yes, that's the ISM versus the economic leading indicators. So what we've done here is we've taken all of the components that go to the OECD leading indicators, and we checked how many of those are rising compared to those that are falling. And actually today, about 12% or 13% of all global economic leading indicators are rising. When you look at that, what happens to that index compared to the ISM is completely decoupled from that, and everyone is kind of suggesting, oh, we're still above 50. But actually, if you look at underlying global numbers, there's still huge scope for downside in terms of the ISM.
When we finally get out of this, where will we be? What's going to take it? Are you expecting Greece to actually default? Where are we over the next 12 months, 18 months? Can you give us a brief sort of look?
listen, this is kind of how I would position portfolios at the moment, is that you have a lot of risks associated to the economic cycle in terms of what's happening in Europe, what's happening across the world. So at the moment, it's capital preservation, and that's really the issue that people should be thinking about. How do I not lose money? That's still a possibility in terms of how you structure your portfolios. But if anything, I wouldn't keep too much of my money in riskier assets such as equities or indeed commodities.
Maybe under the mattress. Fredrik Nerbrand,
Yes,
thank you very much
nice.
indeed.
Thanks so much.